Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Now, a 3-hour conversation with Dan Ives of Wedbush. I don't know, where's he been?
I have no idea where
he's so large now that we can't even get him on the show. Dan, let's talk Tesla first. I know you're going to give me the positive spin. Liam Denning writes a beautiful column. Musk tells Tesla dream, but don't ask for the details. What's the timeline across April, May, June to where Musk has to seep out the successful initiation of the so-called plan?
Look, I think last night was a big start because the sub 30K vehicle, I'll call it a Model 2.5, it's going to be accelerated. I mean, this will probably come first half 2025. And more details clearly have to come out, but this is no new factory line. I think this is a huge start for what the bulls needed to hear on the Tesla story, especially given the dark days and what was really a train wreck 1Q.
I mean, Paul, jump in here because, Dan and I don't agree on this. I mean, he's a good friend, but, I'm with Liam Denning. I'm like, are you kidding me? That was a conference? Was that a conference call, Dan Ives?
Relative to the last few calls, which we talked about, right? I mean, it was a disaster. Last night, you actually had a vision. The growth strategy was laid out, talked about the lower cost vehicle, and the fears were they were going to go straight to robo-taxis and autonomous. That was a big overhang in the stock. And then you look at the margin, the cost cuts. I finally feel like there's a blueprint.
Paul,
after a few quarters.
Paul, help me here. I'm on 6th Avenue. I'm trying to get up to Central Park South.
Sure, who is
to
it?
go left or right. It's a roulette. What's the robo-taxi do when all the cars are turning right on 58th Street? Explain what a robo-taxi does.
Well, they're going to do.
It's 6th Avenue and 58th Street.
It's going to employ artificial intelligence. AI is what's going to happen there for you.
AI.
Hey, Dan, so I guess I got off that call yesterday. I was walking on the boardwalk down the shore. I actually dialed into the call to listen, and I got off the call saying, I either believe Elon and I buy the stock, or I don't and I sell the stock. Is that where we are now with the stock, do you think?
Definitely. Look, I think it's the knives have been sharpened. So bulls and bears, you make the bet here.
Yeah.
And I heard from many bears, obviously over the last, call it 6 to 8 hours, they'll have their stuff. But I think for the bulls, they finally have something to hang their hat on. And again, betting against Musk for the last 4 or 5 years, it's like betting against him in this series.
He has done this before, there's no question. Okay, I'm Tesla'd out. Dan Ives on Microsoft. That's going to be a different call, a different earnings report, isn't it?
Oh, look, this is the tactician. I mean, you have the Hall of Famer Nadella. The AI revolution, it's here. And I think the monetization that we're starting to see at Microsoft, we see it, across, I think, the software layer. This is the call the whole street's going to be watching. Because it shows where the monetization of AI is as the baton gets handed from NVIDIA to Microsoft.
So, Dan, that's kind of where I think a lot of investors would like to see this Microsoft story go. It's up 8% year to date. It is not getting fully priced in as an AI story, it seems like, relative to some other names like NVIDIA. What do you think Microsoft needs to say on their call tomorrow to maybe kind of get that story across a little bit more?
Look, I think it's really numbers. It's showing Copilot in terms of what deployments look. It's looking at the monetization. Of course, Azure, the cloud number is the big focus as that actually continues to be something that's probably the best barometer in terms of what the Microsoft story is doing. Look, they have massive tailwinds. And I think the broader story we're going to see across tech earnings season is the AI revolution's here. The baton's been handed from semis to software, names like ServiceNow, Salesforce, Oracle, among others.
And Dan, on Microsoft, I go back, I just take everything from pre-pandemic. Basically, Microsoft modeled out 2024 has done a double in revenue since 2019. Is that an extrapolative function? Can you take a double in revenue over 5-6 years and take that out into the Dan Ives 2030?
Well, and Tom, I take it one even step better. It's really about the AI and the cloud component, because 55% of revenue is cloud for Microsoft today. Next 3 to 4 years, it's going to be 70, 75%. So that multiple is going to continue to expand because of that higher margin business. That's why I believe it's, there's a $4 trillion market cap in a year.
Dan, the rep on you is you're an Uber bull. What is your least favorite tech company? Which one has the Ivesian radar up?
Look, I'd say least favorite. It's some of the legacy names. Like if I look at like a Cisco as a share donor, I think some of those are the ones that are really going to struggle if they don't get aggressive. But even look at Cisco, they buy Splunk, right? I mean, the point is, this is going to be really an arms race that's going ahead. But Tom, like we've talked about, I think tech, this is just second, third inning of this tech bull market.
And Dan, I guess one of the questions for a lot of folks who follow tech is just kind of this AI, trying to size out AI and how much of the AI CapEx, how much of the AI investment over the next 5+ years is incremental, or is it just taking from other parts of the tech stack? How do you model that out?
I think about 60, 70% of it is incremental, because the difference is that it's revenue generating. I mean, if you look at the use cases, they're revenue generating. This is not just spending on infrastructure. And I think that's what's happening really across verticals. And we're starting to see it now. I mean, you look at Palantir, it's a good example where the use cases are exploding. And the CapEx is just massive, not just in big tech, but I think what we're seeing across the board.
I mean, Dan's like got the sweatshirt thing going. For those of you not on YouTube, I mean, it's a stunning. Pink, do you do 5 or 10 miles this morning? Are you going to go out for pre-morning jog, Dan?
I think I'll do a little Peloton and to get the heart rate up.
Yeah, it's good.
See, that's what I do.
I take Tang Zero for the heart rate. Dan Ives, thank you so much with Wedbush. Right now, she's more than a nothing burger. She is exquisite in the analysis of the American economy. Lindsey Piegza joins us now with Stifel. Lindsey, how do you use cap goods, ex-Air, ex-Boeing non-defense? How do you use one of these obscure statistics?
Well, I wouldn't argue that it's overly obscure. When we look at capital goods orders and we exclude aircraft and defense, what we're really doing is removing that volatile transportation component. And we can see then the underlying trend for business investment. And in fact, the reason that we need to do that is because when we look at something like last month's numbers, transportation plunged nearly 20%. So we need to take out that volatility to really get a sense where business investment is going. And right now it seems to be still positive, but very minimal growth in terms of those capital, those investment dollars flowing out into the marketplace.
Elon Musk in a call last night, he says, I want to see cap goods orders, non-defense, ex-Air, ex-Tesla.
Ex-Tesla.
That's coming next.
So, Lindsey, just stepping back here, what's kind of the Stifel GDP call for the remainder of this year and maybe for next year? I mean, I think a lot of folks feel like the economy may not be working for them despite some of the headline numbers.
Well, I think the economy right now is still solid. We're still seeing consumers spending. We're still seeing businesses investing. But as I mentioned, we're losing momentum. We're seeing those heightened signs of fatigue. So what does that translate into for GDP? We're looking for about a 2.5-ish% average pace for 2024. Now, of course, volatility quarter to quarter aside, Q1 may come in a little stronger, but 2 to 2.5% for the current year. The bigger question is, where do we go into 2025? Because if we continue to lose momentum, we've gone from 5% in the third quarter to, let's call it 3% at year end. If we hit that range of 2.5 this year, what if we continue to lose momentum into next year? Now we're virtually falling below the bare minimum that you would expect from a developed economy. But at this point, is the Fed still tolerating above target inflation? So that's my biggest concern, that we're slowly moving into more of a stagflation scenario.
I asked this question the other day, Lindsey, but the fact is a central bank can't get out front, whether it's ECB or Fed or the Bank of Thailand. I mean, they have to wait and go ex post, right?
I would argue the Fed is, right now, the Fed is backing itself into the corner. The Fed should have raised rates higher. Now that they see inflation reversing course for 3 consecutive months since the start of the year, they need to re-engage, raise rates to a sufficiently restrictive level to get price pressures under control, and we can start to talk about a sustainable recovery. The longer they slow play this, the more price pressures become entrenched into the economy, and the more difficult it's going to be to ever get us back to that 2% target.
Cancel the Piegza lunch at the Eccles building. That's all I can say. Folks, what you just heard there this is classic Lindsey Piegza. What she just said is a huge deal.
So, Lindsey, just to be clear here, you think that inflation is such that the Fed's next move should be a rate increase versus a cut?
When we look at inflation, the target is 2%. The target is not 3. The target is not 3.5. So the Fed has not met their mandate of stable prices. And with momentum now turning to the upside, I think the Fed has more work to do. Now, that's my preference for what the Fed should do. That's not what I necessarily expect the Fed to do. This is a Fed that desperately wants to provide relief. So I do still think that the next move is likely a rate cut, but I think that would be a material mistake on the part of the central bank.
Wow. So inflation, is your sense that this inflation that we've seen in the past 3 months, that's something that's not a blip, that's something more?
I do think it's something more. If you think about the motivation for the Fed to raise the rates, it's to increase borrowing costs, make that more onerous, slow consumption, and by extension, slow the economy and result in more benign inflation. But when we look at this consumer, there is still a good amount of spending and borrowing power out there in the economy. So clearly the Fed has not done enough to slow, let alone break the consumer to ensure a return to price stability.
What's the response of your clients, and particularly your institutional clients, Lindsey, when you say this? I mean, I'm not going to say you're an outlier call here. I think Jim Bianco's really led with the idea disinflation vectors out of tune. But these are really aggressive comments you're making. What is the response of your institutional clients to this?
Well, again, this is what I would hope the Fed would do. But when we look at our forecast, when we look at the messaging from the Fed does appear willing to tolerate above target inflation. So again, our expectation is that the Fed will offer at least 1, if not 2 rate cuts by the end of the year, given their desire to continue to perpetuate these solid conditions in the economy. But when we look at, I think, the longer run stability of the economy, the longer run ability for us to get back to price stability, that's where I struggle, because historically we see that the Fed does need to raise rates above the previous peak in inflation.
Well, when Kashkari's out the door and you're the president of the Federal Reserve Bank of Minnesota, Lindsey Piegza, just simply, if we get a Piegza rate rise, does that push us into recession?
I don't necessarily think a recession is necessary to get price stability, but I do think that a much slower growth rate would likely be the outcome, which is not necessarily, again, something that we need to avoid at all costs. The normal fluctuations of the business cycle are very healthy, but the biggest issue is getting us back to a point where inflation is under control, and that allows everyone to enjoy and participate in the economy.
I just sent one of our interns a note, Lindsey. I want to get you on next week after PCE.
Yep.
I mean, I think these are wow comments. These are, and again, this is the prescriptive idea, Paul, the should of it, or could. And you're saying, what will they do? They're just going to hold rates here, Lindsey, until they see more data?
I do think the Fed is on an extended pause for now. But again, if inflation stabilizes at these levels, with the Fed willing to tolerate above target inflation, I think the Fed would be willing to give us 25 or 50 basis points of cuts by year end. But if we don't see further improvement in the inflation data,
Right.
they would likely return to the sideline for a second round extended pause.
Lindsey, thank you. Just superb. We'll feature that on Single Best Idea today out on Apple Podcasts. Those are stunning statistics from Dr. Piegza. Anurag Rana in Chicago's Encyclopedic in a Cloud, and Mandeep Singh picks up the pieces on Meta as well. Thrilled to have them with us right now into this tech earnings season. I guess I got to go to Meta first. Facebook is what I call it. Like
Sure.
They changed the symbol.
I know.
Mandeep saying just simply, Zuckerberg, did he start all this cost cutting? Is Zuckerberg the one that gave the billionaire set permission to cut costs?
Yeah, and he was quite aggressive, and he was right in terms of pivoting to AI and the cost cuts.
It's up 358% from the Mandeep Singh bottom after Singh said, shut up and buy it.
Yeah, look, I think everyone had their doubts whether this company can ever grow double digit again, the top line, and they have shown, they have executed around their cost cuts, and also from a product perspective, they have made a lot of changes in terms of the ad stack, pivot to AI. I think kind of moving away from metaverse last year was a great bet. And it's paid off in terms of, what they are doing with ad impressions and pricing versus what the other players are doing.
Hey, Anurag, out in Chicago, the tech hub of Chicago, I got the stock at Microsoft. I'm surprised it's only up 8% year to date. I thought it would have been more. It seems like these guys are just hitting on all cylinders. It's a great AI play. What is the story on Microsoft these days? What do you expect to hear from them, see from them from their earnings?
It's still trading at over 30 times earnings compared to, Apple at 23 times. So always remember that, the market cap is so high at this point. So some of those expectations are already baked in for what they're going to realize, whether it's on the AI side or whether it's on the, the GitHub or Office 365. So there's a lot of that, I would say, is currently baked into the price.
Oh, go ahead. Paul,
no, I was going to say,
please.
Mandeep, Facebook, Google, again, Tom and I, we go old school verbiage here. Facebook, Google, it's a play on digital advertising in very large part. What's the state of the digital advertising market out there? Because you look to linear television and all they have is healthcare ads for various diseases. They don't have any real advertisers anymore. Are they all on digital?
And so that secular move is still playing out. I would say that, the sentiment around small businesses is still pretty weak. And when you look at a company like Meta, they are exposed more to small business ad spending. So I'm surprised they're able to grow top line 25%, even with the SMB spending being weak. And some of it is easier comps, so that'll get tougher in the second half, but still it's pretty remarkable.
And now for all of you worldwide, we go CFA with Anurag Rana and Mandeep Singh. Okay, I want to look at discounted cash flow, and there's this idea of terminal value. Now, the triple leveraged all cash fund is on a perpetuity terminal value. I mean, we're just going out forever. Mandeep Singh, in tech in general, in these magnificent 4, 5, 6, 8, whatever it is, how do you study terminal value, or is that impossible?
No, I think with companies of these sizes, in terms of where their top line is, clearly, for them to keep growing double digit, it's extremely tough. And so you got to model in growth decelerating. But what they have shown us in the past 18 months is there's so much leverage to be gained from cost cuts. They were not running efficiently, and that's what I think is a key driver of
Nicely
EPS.
framed here. Anurag Rana, how do you do a terminal value, for example, on Microsoft? Because I got double-digit revenue growth. I got to model that in. Maybe it's a harmonic deceleration, whatever you're doing. And Mandeep correctly says there's a new religion in cost cuts. So where's your terminal on Microsoft? Do you go out a decade?
Yeah, and with Microsoft, there's a slight difference because they are spending a lot on data centers. So I have a concept that is, you want to look at operating cash flow more than you want to look at free cash flow right now because their capex is more than 3 times. So if you see the operating cash flow growing at the pace it is, it's actually getting to a point that's it's getting better than Apple at this point, with the potential of growing top line between 10 to 15% at least for the next 5 years. So I think Microsoft is in a better position than any other tech company right now, in our view, because of the ability to drive those operating cash flows.
And Tom, just looking at the FA function for Microsoft, CapEx in their fiscal 2020 year was $15 billion. This year, for the June 24 year, 43 billion is the forecast.
The operating margin on Microsoft, folks, is 40%, 42, 44%. When do these get too big, Mandeep? I mean, the first business book I read was Ida Tarbell, Standard Oil. I'm 15 years old. I'm reading Ida Tarbell.
Nice.
I didn't have a life.
Explains a lot, right, Lisa?
Okay, but just thank you, Lisa. When do they just get too big for Washington? I mean, if you extrapolate out Anurag Rana's operating cash flow, there's a point where they're too big, right?
Yeah, I mean, and I would use Meta as a proxy. Before they started investing in Reality Labs, their operating margin was north of 50%. So it got to a point where they had to do something with all the cash that they were generating, and they started investing in Reality Labs. And look, the regulators, they are looking at all of these companies, including the partnerships. That's a new way to acquire for a lot of these companies. But in the end, you know, they are terrific business models, and they are sustainable.
Free cash flow pre-pandemic, Facebook, 21 gazillion. It's a double, 43 gazillion up to 48 gazillion. Mandeep Singh, Anurag Rana, when do they get too big?
See, I would say for a software company, something between 45 and 50% is achievable. You know, I remember covering Visa and MasterCard about 15 years, 20 years ago. Right now, their margins are 55% and somewhere in that range. So operating margins for software companies, probably peak around 50%. And we only have a handful of companies right around that mark. Adobe is somewhere closer, and Microsoft's going to get there between 45 and 50.
Good morning, Meredith Whitney. Did you see Visa's earnings report?
Oh, yeah.
I mean, it's like there's a printing press.
People are spending like crazy. Anurag, as we head into this tech earnings season here, how much are we going to hear about AI? Is it going to be every other word, every third word? Where are we in kind of the development, the evolution of AI? I know you and Mandeep and your teams have done a lot of research on this.
I would say very early innings, and I think this is not going to change at least for the next few years, when we see more and more product development from all these companies. Right now, barring Microsoft, none of the big software companies have been able to monetize it in a proper way. And I think the next year we're going to see more monetization, but more new products coming out, because right now we are seeing the bulk of the investments going into the hardware and the infrastructure piece of it.
I just, my head is spinning over where we are versus like Nifty 50 of my Ute.
I know.
Or like you mentioned Ken Olsen and Decker earlier. I mean, this is, Mandeep, this is totally different than 1998, 1999. I mean, there was a lot of nonprofit going on. All these people is it basically on a 90-day basis they're minting money, and we have the distraction of what Tim and Carol do at 4 p.m.?
And they have the deep pockets to invest. So the one big difference here is all these companies that are investing in CapEx, they can afford to do that, and without a big hit to their margin. So clearly, I think the fact that they have the data and the CapEx wherewithal, that's what drives these.
Okay, I got 10 seconds. I'm so sorry. Are we going to hear share buyback announcements?
Yes.
You got to be kidding me.
Meta announced a dividend. That was symbolic, even though less than 1% dividend yield. But clearly, Google is on the verge of doing something similar. The street is expecting. So waiting to hear
This is fun. Let's do this again. Anurag Rana in Chicago, Mandeep Singh with their studios. On Apple CarPlay, on YouTube, it is the front pages. My people said Lisa was wound up today. Oh, Lisa, how do you start?
Fired up. Okay, so walking around New York City streets, what do you see everywhere? Scaffolding. Yep. It's everywhere.
Don't get me going.
See, this is it. It's a hot button issue, okay? Did you know there are more than 8,500 scaffoldings around the city streets? If you were to stretch them out, it would go from Manhattan to Montreal. That's how much we have. That's what they're saying, okay? This is the New York Times. Now, they're supposed to be temporary, right? But here's the problem. There's nearly 1,000 that have been in place for more than 3 years.
Yeah.
So they're sticking around. There's a lot of regulations around it. City officials want to do something about it. They want to change it.
Fix it.
Yeah.
The whole place, there's parts of Midtown, folks, it's like Place Vendôme in Paris without the charm.
Yeah.
I mean, it's like miles of scaffolding.
And I think you just got to go around and just take it down. I mean,
Lisa, what are they going to do? You're reporting, what are they going to do?
So they're going through, they want to put all these reforms down. So they want to reduce how many there can be, how long they can be up. They want to increase the fines. That's what they think they're going to do, so they can strengthen the enforcement of it. So they think that if they increase these fines, hit hard on enforcement, it's going to take some of these down.
I mean, I don't know. To me,
this seems like an easy one. If I were a politician, this would be an easy win for me to go out and get.
You have to have them up for safety.
Yep.
I get that.
Of course. When there's
agrees.
construction.
I've had a friend I get it. But if it's been up for 3 years and nothing's going on, take it down Tuesday.
Yep, exactly.
That's the problem.
All right, what else we got?
All right, airlines. This is a good one for travelers.
Yes.
They now have to pay automatic refunds for things like canceled flights. This is new from the U.S. Department of Transportation. Came out today. So they have to provide these automatic refunds. This is to from within the U.S. if their flights are canceled or even if they're altered, significantly altered. There are certain restrictions for that too.
Yep.
But the goal is just to make it easier for people to get their money back, to make those refund policies more consistent from one airline to the next, because it differs as you go from airline to airline. Travelers will also get refunds for checked bag fees if the bag is lost, and also if it's not delivered within 12 hours of domestic flights. So there's another bonus there. And you're going to get it right away. It's automatic refund. So however you paid, whether credit card or even cash, then that's how you
So I don't have to stand in line with like 5,000 other people that could customer service in Newark for United.
So it's gonna be
Usually I just eat it. I'm like, all right, my flight's canceled. I'm going home.
But now you don't have to.
Okay, very good.
That's good news. You don't have to eat it. You can get your
money
money back.
Can we do an audible here?
Yes.
Did I hear yesterday Terminal A at Newark won some award?
Yes.
Yeah, Michael Barr had that news story. We won some award, or they won some award for like greatest terminal. Now it's
nice.
Awesome. It is great. And the best
really
thing
nice.
about the new Terminal A is when you get off your flight and you need to get your Uber, it's a very organized, easy way to access you. Unlike Terminal C, which is a free-for-all, and you put your life at risk.
Tram sometimes. It was a little.
So anyway, they did a good job. Terminal B is now undergoing the similar type of construction renovation. So
we're getting there. We're getting there. After years, we're just the negativity about this, we're getting there. If they just fix the potholes on 58th Street. Next.
That's going to take an eternity. American Airlines. Do either of you have the advantage, the loyalty points for American Airlines?
I'm not an American guy. I'm not a DFW person.
Well, they're changing how flyers can earn rewards again, because they've done it before. A lot of airlines are changing it. Here's the difference. Okay, so starting in July, travelers will only receive loyalty points, advantage miles for airfare if they book directly with American or one of its partners or a preferred travel agency. That's the only way we can do it. The co-branded credit cards, that's not going to be affected. That can get you your miles. But it just shows how they're continuing to change, to try and get in some new customers, get new people hooked on American.
Paul, don't you think from a securities analysis standpoint, it's just a tough business?
It really is. I think, and I'm so surprised that you see these folks and they make money in one business and they say, "Oh, I'm going to go start an airline." Like why would you want to get into?
American Airlines 10-year track record. Microsoft 28% per year. Disney tanking 5% per year. American Airlines negative 7% per year.
Yeah.
Again, off the pandemic.
It's a tough margin. It's got it's a low margin business, and you got fuel costs you have to deal with.
You got people like Lisa arguing with you.
Yeah, exactly.
But people
you got
are
unions
serious about their points.
The last time I did a La-di-da flight, I had to stand in the lounge going out, and I had to stand in the lounge coming back. That's how messed up it is.
The lounge is packed. Okay.
The lounge is literally there were no seats.
See, I don't get in the lounge. Where am I missing out?
Well, you can use your points to get into the lounge.
Okay.
The lounges, you know what? The lounges are very big in Europe. That's like the thing. Everybody's in the lounge in Europe. I never go to the lounges here in the U.S. Yeah. I don't know.
I can report United opened a lovely lounge finally at De Gaulle, CDG.
Okay.
They opened a lovely lounge.
Did you have a seat there?
I had a seat.
There you go.
It was very, very low.
Of course he did.
Next.
When you get triple, first class,
then
you get a seat.
You get a seat. You
Next.
definitely get a seat. Tom, I saw this one. I thought of you right away. Will there be a Shogun season 2?
Oh.
This is the question. Business Insider. Okay, so it's streamed on Hulu. Is that how you watch it, on Hulu?
Yeah, I think so.
You think
I'm not
so?
in charge of that. Yeah.
So here's the thing. The creators are telling The Hollywood Reporter the show was made so long ago because of lengthy production. It took a long time. It was like a 5-year journey just to make that first season. So if they were to be shooting a second season, they would already have to be shooting already. But they're saying since it took so long, they already got that pre-production work out of the bag. So now it'll be a little bit faster if they were to do a season 2.
Well, I don't know. I'm looking here at the
viewers
story.
want it. They're asking for it. The Shogun, it was a self-contained novel, but there were a series of novels too.
Maybe.
So it could kind of branch
Mr.
off.
Clavel gave them their sequel. He wrote
Yes.
4 or 5 books, and Taipan is after Shogun, and it's 19th century, 1840, 1850 Hong Kong. And you could even have some of the same characters doing, and it could show up again anytime. But Clavel gave them the sequel to the Pacific Rim, in this case, Hong Kong, from Japan. But it'll be interesting to see.
Would you
I haven't
watch
seen the
season
last
2?
episode.
You haven't seen the last?
No, I haven't seen the last one. I'm waiting for Mrs. Keene to arrive. I'll see it. Actually, I've read the book twice, so I think
Oh,
I'm
you know.
If you haven't read the book, I highly recommend, for those that have seen Shogun, it is a rewarding 1,200 pages. It is what Clavel did. And I should point out also King Rat of the Singapore, where the Singapore airport is, they bulldozed the prisoner of war camp from World War II.
I didn't know that.
And King Rat is his shortest and his best book. It is, I can't say enough about the intensity. I read it when I was like 15, and I was ruined for it. Lisa Mateo, thank you so much for the newspapers. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.